Hello guys, welcome back to the weekly analysis series of the company. After a lot of research, we came up with one of the best dominant company and monopoly company in the railway sector. So today we will have a detailed look on IRCTC or Indian Railway Catering and Tourism Corporation Limited. In this video, we will have a detailed look about the company's business, fundamental key highlights, balance sheet and PL account holdings, profit and loss account. Eventually, we will also see pros and cons of the company and inside trades of the company. And at last, I will share you my own views about this company, whether you should add this company on your watch list or not. But before we start, if you are new to the channel, don't forget to like and subscribe the channel and share with your friends and family. And if you have already done that, then thanks for supporting the channel and it really means a lot for us. So at first we will have a look about the company. So IRCTC is an Indian public sector undertaking that provides ticketing, catering and tourism services for the Indian Railway. It was initially wholly owned by the Government of India and operates under the administrative control of the Minister of Railways. In first quarter of financial year 2023, company's revenue was 853 crores, rose by 251% from first quarter of 2022, which was 243 crores. All the five businesses reported growth in volumes. Company's revenue from catering services business soared to 352 crores in first quarter of 2023 from 56.7 crores in quarter 1 of 2022. Even internet ticketing businesses shows a revenue of 301 crores. Rail near business posted 83.6 crores in revenue and tourism business revenue amounted around 82 crores. Now let's have a look on the company's current price and graph, where the current price of the company is 735 rupees. So the 52-week high was 1280 rupees, whereas the low was 560 rupees. Company has given negative 23.34% return in last 1 year to his shareholders. Now we will have a look on the fundamental key highlights of the company, whereas the market cap of the company is 58,490 crores. The stock PE is trading around 70.4. The ROCE, which is return on capital employed, is 51.3%. The EPS, which is earning per share, is 10 rupees. The current price is 730 rupees. The book value is 23.6 rupees. The ROE, which is return on equity, is almost 40%. The promoter holding is 67.4%. The dividend yield of the company is 0.5%. The face value is 2 rupees, whereas the 5-year sales was 4.34%. The 5 years of ROE, which is return on equity, is 30.1%, and 5 years profit is 23.8%. Now let's have a look on the quarterly results of the company. So we have marked the important details of the company to make it easier. So the OPM, which is operating profit margin, on June 2019 was 23%, whereas in June 2022 it's 38%. We will just compare the June versus June comparison in this quarterly result. So on June 2021, the operating profit of the company was 112 crores, whereas in June 2022 it's almost 321 crores. The net profit after paying the taxes and after deducting all the expenses, the company's net profit was on June 2021 was 83 crores, whereas in June 2022 it's almost 250 crores. Eventually the earning per share of the company has also increased. Now let's have a look on the profit and loss account of the company. So in profit and loss account, the operating profit of the company on March 2015 was 152 crores, whereas in March 2022 it was around 881 crores. The OPM, which is operating profit margin, on March 2015 was 14%, whereas till now it's 44%. The net profit after paying all the expenses and tax, the net profit on March 2015 was 131 crores, whereas right now it's around 830 crores. The earning per share of the company is also good. Eventually the dividend payout of the company is around 42%. Now let's have a look on the balance sheet of the company. So in balance sheet we will just have a look on some of the important marked areas once. So the total liability and total assets of the company on March 2015 was 1162 crores, whereas in March 2022 is around 3837 crores. The company has taken some borrowings from March 2021 to March 2022, which is around 107 crores. The company has put some of this money on the reserve. We can see that in March 2022 the company's fixed asset has also increased, and the other assets, which includes inventory, has also been increased. So this is the balance sheet of the company. Now we will have a look on the cash flow of the company. So in cash flow, we will just have a look on the marked areas once. Overall, in cash flow, the company's net cash flow on March 2015 was 6 crores, whereas in March 2022 it was 23 crores after paying out all the investment activities and financial activities from operating activities. So let's have a look on the main ratios of the company. So the debtors day has been increased. So what is debtors day? So debtor day ratio measures how quickly cash is being collected from debtors. Even the inventory day has also increased, and which means that the average time a company keeps its inventory before it is sold. And at last, the cash conversion cycle, which is in negative, so it means that the number of days that a company takes to convert its investment in inventory and other resources into cash flow from sales. Now we will have a look on the inside trades of the company. You can pause the video and have a look on the party's name and quantity of the company in which the person has bought the shares and at what average price. So let's have a look on the pros and cons of the company. So in pros, the company is almost debt free. The company has expected a good quarter result. The company has provided a 23.8 CAGR over the last 5 years. The company has a good return on equity, which is ROE, of 31.6%. The company has also maintained a healthy dividend payout of 41.3%. The debtors day has improved from 161 days to 111 days. And in cons, the stock is trading around 30 times its book value. The company has decreased a poor sales growth of 4.34% over the last 5 years. Now let's have a look on the holdings of the company. So in holdings, as per March 2022, the promoters hold 67.4%, which is unplaced shares. The mutual fund holds 0.10%. The domestic institution investor holds 5.12%. The foreign institution investors hold 6.42%, and the retails own 20.96% as per March 2022. Whereas in June 2022, the total promoter shares is 67.4%. The mutual fund has increased its shares by 2%. The DII has also increased its shares by 0.8%. The FII has sold its stake and it's completely now 5.87%. The retail and other has also increased its stake by almost 1% as per June 2022. Now we will have the summary of investment checklist by ticker tape. So the current price is more than the intrinsic value. The stock has generated better returns than FD. The stock doesn't offer any attractive dividend returns. It's a good time to consider as the stock is not on overbought zone, stock not on ASM or GSM list, and not a lot of promoters holding are in placed. And now let's talk about my opinion about the company. So the company has a monopoly in this sector, which may not be possible by any other company to enter in this particular area. So from this, company has an advantage that they can even increase the price of the company's different products, which may give them more profit and shows a good result in the financial statement. Even the finance are looking good about the company. So I will add this company on my watch list and I will try to get it on discount, which maybe I can. So thanks so much for spending some time with us. We will back with another topic. Till then, bye and have a nice day. Bye bye.